Hi everyone, I'm John, one half of the Corporate Breakout Couple. On this channel, we cover a lot of content around personal finance, financial literacy, breaking out of the rat race, early retirement, wealth creation, and much more. In today's video, we're going to focus on a particular age group, one that I personally feel has a huge advantage over other age group. Who am I referring to? Yes, I'm referring to the age group who have started working 5 to 10 years into their career, and today's topic is about financial independence. Just to share a little background, my wife Fran and I have hit in financial independence at the age of 40 in 2020, and we believe everybody can do it, especially this group of people who are just 5 to 10 years into their career, and we'll show you why in this masterclass. And just to share more, we conduct masterclasses a few times a month. Typically, they are about 1.5 hours long. Today is a condensed version, a snapshot of what we have shared previously in one of our masterclass. And we want to focus on FI, financial independence. Why do you want to gun for FI in the first place? And for those of you who are younger, in your career, why starting early will give you a fantastic head start, and how you can maximize your full-time job as an employee to get to FI much faster. So let's first define FI. What is FI? Financial independence means having enough money from your investments, savings, or other sources of income to support your lifestyle without relying on a regular job. I think this part is clear enough. And why do you want to gun for FI? Now, one of the things why people want to be financially independent is they want to first gain control of their time. Because guess what? As a full-time employee, you don't have control over the time. You are contracted to work maybe 45 to 50 hours a week, depending on which part of the world you're from, and you don't really have control over that. The worst case is a lot of us work overtime for the same pay because, the job just demands that much more of us. So actually, we don't even have control over time after work. And well, that sucks, right? So one of the key things to get financial independence is not to have reliance on a full-time job anymore, and hence giving you control over your time. And you want to break free from the control of money over you. So this is very interesting, right? When you are working at a full-time job, what are you working for? Essentially, most of us, except those who really love our jobs, which I think is just a minority, most of us don't really enjoy our job that much. So the key reason why we are doing it is simply for the salary, which is actually money. So money kind of controls our time, isn't it? If you want to have time freedom, you won't have it when you are working in a full-time job. So when you have FI, you actually break free from the control of money over you as well. And that then gives you the freedom of choice. And these are 3 very key points that you can easily conjure up, or rather think of, to gun for FI. Now, let me give you some numbers. This is how the traditional retirement path looks like. I kind of covered this in one of my previous YouTube videos. Do check that out as well. I will share in the link below. So typically for a retiree that retires, in this case, I put it at 65, right? Singapore, retirees usually retire at 65. So this is the life cycle. This person usually starts work at around 20s, sometimes mid-20s. And then some people do get married in their probably early 30s now, because it's a later age. Some of them have kids. And then in their mid-40s, they are the sandwich generation. They have to both juggle their kids and their aging parents. And as they grow older, their career usually stagnates, it plateaus, or it might come downhill, because not everybody has the career stamina to keep going in their career, correct? Because it takes a lot of mental energy, a lot of physical time as well. And then they are just holding on basically in their 50s to 60s to retirement age, which in this case at 65. Let's say for a retirement savings of $500,000, whichever denomination that is. Now the question is, many people during retirement, when they hit the retirement age, their savings start to deplete. Yes. Why? Because they have lost their main source of income, their only source of income, which is their job. So they don't have recurring income coming in. They may have a payout from the government. Together with savings, it starts to deplete. Together with health issues, it starts to deplete. So the trajectory of a traditional retirement path is as such in terms of the retirement savings. Now, on the flip side, if you are somebody who's only 5 to 10 years into your career, meaning you are perhaps about 30, early 30s, you have a huge advantage because compound interest really works to your favor. Those of you who are into investing, you know what I mean. Let me share with you what it really means to have compound interest, right? If you truly appreciate how compound interest works, you'll find all sorts of ways to stack on multiple income streams. The chart I showed earlier, actually it does go exponential. I'll show you in the next chart later how powerful it can become when you have not just one stream of income from your main job, you have 2, 3, 4 streams of income from investments, from side hustles. You can stack everything, and then towards the end of it, you will have tremendous wealth. Well, let me show you in a chart format. Okay, but before that, let me talk about investing first. A lot of people, sometimes they talk about, let's say, value investing. They talk about the long term, you buy your value stocks, hold it for 15, 20 years. Now, as a seasoned investor, as a multi-asset class investor, I'd like to share with you that actually, if you're into investing, there's all sorts of investments. And certain investments take a longer time frame. Certain investment takes a shorter time frame. So my suggestion for you is plan your investments in three tranches. Your short-term target, your mid-term target, and your long-term target. Short-term target, I'm talking as short as 6 to 1 year, 6 months to 1 year. That is short, and that is enough for certain investments for you to go in and out. I'm not going to dwell into investments today. By the way, this is not financial advice, so everything is for educational purposes only. So short-term target would be 6 months to 1 year. Mid-term is anything between 3 to 5 years. And long-term can be 8 to 10 years and beyond. Personally, I don't like to hold any assets that's longer than 8 to 10 years because guess what? If you hold something for 20 years and you realize it doesn't pan out, how many more 20 years do you have? And the important thing is sometimes when you leave an investment in there to, so-called grow, and you don't really touch it, you actually miss out the entire lesson to learn about it altogether. So personally, I'm somebody that is for continuous learning. And that means it must be experiential. When it's experiential, it means you must be vested in the game. You must have money on the table in that particular asset class that you're learning about. It could be a short, mid, or long-term asset class. Like real estate is a longer term investment. So the cycles will be lesser or in your lifetime. That means the number of real estate that you actually have in your lifetime will be lesser compared to maybe stocks that you'll be buying, selling a lot more. So this is what I'm saying in terms of timeline. So you want to accelerate this process of investing with high income skills as well. I'm talking about side hustles with skills that you have, skill-based side hustles that you can grow and get more dollar per hour, right? And in this side hustles that are high income skills, you should always be focusing on value creation. And I shared this in many of my previous videos. Focus on the value that you can deliver to your clients so that you can actually charge more per hour. And that skill will increase over time, that it should be something that you're passionate about. Okay, I talked about this multiple times. When you're investing the passive ones, try and harness the compound magic, right? Compound interest magic. For your side hustles, you try and go for skill-based that increase dollar per hour instead of purely trading time for money. Let's say like driving Grab. Anybody can drive Grab, right? Whether they rent a car or if they are owner of a car, they can drive it. But you don't really increase your dollar per hour. And that is not a skill-based side hustle. You want to do a skill-based side hustle that can actually increase dollar per hours. Now, let's look at fast track retirement, the difference between the traditional path. So same thing, this person starts work, got married, have kids, and in their mid-40s, they will have kids and aging parents to juggle. Now, the difference is this person starts investing after 5 years into his or her career. And not only that, this person also builds side hustles. And that is when you can see the trajectory from the age of 35 to 40, even though you have to, don't forget, commit a large chunk of money into your wedding, into your house, the honeymoon, and all the one-time cost renovation that you need. That's why there's a slowdown in savings over here. But you can see from 40 onwards, you can really start to compound, especially when your investments start to grow and you start to dollar cost average into stack on more, and you have more side hustle income that you put more money into this pool of investment capital. It will really, really start to grow. And that's when you will feel and experience the exponential effect. And you can retire as early as 40, not just 50 that I stated here. Not just 50, 40 if you are really, really early in the game. 50 to me is actually a kind of a safe bet. If you start your journey early, 50 is very realistic. Not only that, your savings compared to the earlier chart continue to increase after early retirement. yes, it doesn't start depleting. It is not a drawing down from your chunk of savings. Your savings, because you have your investment capital, they continue to grow and grow and grow. And because they keep compounding, your quality of life keeps improving as well. Who says that when you traditionally retire at 65, the only option is for you to downgrade? Right? You don't want that. You want the fast track way. You want to be smart about it. You want to have investments. You want it to keep growing so that you can have improving quality of life. How about that? You inflate your lifestyle after you get early retired. Fantastic, right? Your life gets better and better. Now, I want to talk a bit about being a full-time employee. Most people are full-time employees, and I want to share with you that even as a full-time employee currently, you have a huge advantage because it gives you, first of all, a steady income. If you compare to people who runs businesses, right? You know that business people are 24/7 and there's no guarantee in their income. Yes, they have the chance to earn a chunk of money and they can scale their income for sure, but they don't have the benefit of a steady income. Right? Let's not talk about layoffs and retrenchment. So as a full-time employee, you do have steady income. And when you are not well, you go on MC, or when you take your leave, you're on holidays, well, technically you're not supposed to be touched. So you are still paid. That's a huge advantage of being an employee. Because if you're a business owner, you don't get any of this. You need to work even when you're on holiday because it's your business, right? And the personal time is yours. Okay, after work is your time to do whatever you want. And unlike, again, as a business owner or even as somebody who's self-employed, like a real estate agent or an insurance financial planner, the personal time is yours. You can actually literally do whatever you want with it, like watching Netflix, go and enjoy with your friends, which most people does, right? I will talk about this a little later compared to business owners. So this is something that you need to know as an employee, right? And not only that, if I can just add, when you're an employee, you actually have leverage. You can borrow money in an investments like real estate more easily because you have steady income. Because self-employed and business owners, sometimes when their income fluctuates, they may not be as, in terms of credibility to banks, they may not be able to borrow as much money. They may take a haircut on the amount of income that they have because they're commission-based. So this is just something additional for you to note as a full-time employee. So I urge each and every of you, especially now that you are a full-time employee, use your personal time wisely. It's when you can make the most out of something that you can control. And you can use that towards gunning for financial independence. So I always advocate it. Don't leave your 9 to 5 and start your 5 to 9. What does it mean? It means even though you want to embark on this financial independence plan or to be early retired like Fran and myself, don't leave your 9 to 5 or 9 to 6 job hastily. Oh, I want to gun for it. I quit my job. I go and start learning about investing full time. That shouldn't be how it works. You should actually do it together with your job. Go and learn, spend your 5 to 9 wisely, use your job as an anchor point, and then go and do your side hustles and investing skill set with the personal time that you have. 3-5 hours a week consistently, I can tell you, you can already achieve tremendous results. What more if you spend even more time than that? So think about it. If you don't want to be caught in the rat race for 45 years of your life, doing this will actually be a short-term pain, but it will be a long-term gain. All right? Now, another thing I'd like to caution you is the economic climate changes so quickly. So if you notice, before and post-pandemic, there has been a lot of changes in the world, in the investing world, in the business world, in the job market, that things are no longer so certain, isn't it? And because it changes so quickly, I always urge people to stay connected and plugged into the world. So you know what's going on. You can pivot fast, you can move fast, even if you are changing jobs or changing industry. And always hedge your risk within your investment portfolio. Don't only stick to one type of investment, because different asset classes and different types of investments, they perform differently in different economic climate. And understanding them takes experience and takes you putting money on the table in the investing to learn about it. So if you want to be a true blue multi-asset class investor that actually have diversified portfolio, you want to understand each asset classes. So if you're a newbie investor, I don't urge you to jump in everything at once as well. Learn one pick one that you are most comfortable with, and for example, stocks, and stick with that for a while, have a bit of results before you start to learn about other asset classes. And always start small. Okay, so hedge your risk within your investment portfolio because of the economic climate that changes so quickly, and be ready to move fast. Okay, and always have your exit strategies within your plans. And ultimately, my key message for today's video is really about creating the choice. Creating the choice to work or not. Know that your trajectory, for most people, the traditional retirement path is easily in your 60s, whichever country you're from, because many of us succumb to lifestyle inflation or even global inflation. Circumstances that we cannot control has caused us to increase our budget, increase our spending, and we cannot get out of this rat race and this cycle because just by going the traditional path or working 9 to 5 for a job cannot get you to retire any earlier. So the only way I see it is to go into investing and also create side hustles so that you hedge yourself against any scenario by having multiple streams of income. So this is ultimately your choice, whether you want to work hard or not in these 5-10 years to create the beautiful life that you have always wanted much earlier. And I just want to share with you, ultimately, you just want time freedom. Money aside, people want money handled. They have the money coming in. They don't need to worry and think about money, have it handled at the side. And you just want to have that time freedom to do whatever you want so that you have the space, the energy for you to create and do whatever you want without the heavy influence of money. Okay, so come join our Facebook group as well. We have a breakout community by Fran and John, and this is where we support our community members. We have exclusive videos that we create only within the community. We have more personal touch in there. You can engage us as well if you have questions about financial independence, early retirement, and the other community members as well. Some of them are also early retired. So come and join our Facebook group by scanning a QR code or searching for us on Facebook called Breakout Community by Fran and John. Okay, and I wish that each and every of you will gun for financial independence, and this video will help you through whatever that you're going through. Have that little bit of encouragement and motivation to gun for FI, even though, yes, I know work is not easy, life juggling, everything in your life, whether with kids, your house mortgage, your car mortgage, aging parents, we all face it. But if you have the tenacity and the will to gun for something different, something above all this, I believe is totally worth it. Okay, I hope that this video has benefited you and added value to you. Do hit the like button and subscribe to join this YouTube channel, and we can create more videos like this for you. See you in the next video. Bye-bye.